Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thanks for joining us here live every Tuesday at noon, where we talk about everything that's going on in the markets coming up this week and what to look for. And this is next week today. As always, keep in mind, everything we discuss here is for information purposes. Always do your own due diligence or contact a professional advisor. You can always reach out to us at mikeonmoney.com. You can find our email, our phone. You can even book an appointment with us there, and you can see all our other content at that portal. But reach out, any questions about your personal situation. We're happy to answer those questions as well. So let's jump into things. As always, just on a quick COVID update this week. Obviously, the two big things is going on is the booster shots, and of course the rollout for the kids aged 5 to 11. The United States is looking at rolling out that 5 to 11 starting this to next week. They're just trying to get their supply in the right locations, and Canada's still doing some review, but likely to follow suit in the next week or two. And then booster shots, of course, here in BC and Canada, those are starting to roll out. Just like they rolled out the vaccine, age 70 plus is kind of in the first group, and those living in nursing homes. I know Ontario's gotten through those. People higher risk or compromised immune systems. And they just announced this morning in BC that anybody who got double AstraZeneca shots will be the first in line at 6 months after your second shot. You'll be first in line to get the invite to go get your booster. I guess studies have been showing that the double AstraZeneca, your protection is waning faster than if you've got one of the mRNA vaccines. So if you were double AZ, you'll be first in line, and I think they're talking January here in DC. I know that's what I was, and I think my 6-month mark is December, so I'll probably be in early Jan looking at a booster from one of the mRNAs. They haven't said which one yet. They just mRNA, but I think Pfizer is the only approved booster so far, with Moderna going through their approval process now. So that's it on COVID this week. Let's take a look at what's going on or what to expect in the markets. We're still seeing earnings come out. Pfizer is going to be reported, and we'll talk a little bit about that in a moment. Mondelez International is reporting. U.S. Federal Open Market Committee is getting together, of course, to talk about those inflation numbers, and some U.S. general elections are happening later on this week as well. As far as what we're seeing in the future market, they've paused a little bit here after we saw the 3 major indexes in the U.S. hit record highs over the last few days. And also going into the Fed Reserve 2-day policy meeting just around inflation concerns and what they're going to do with the quantitative easing down in the United States. So we'll get a bit more view into what their longer term plan is there. That 2-day policy meeting is has investors a little bit on edge, although most of the concerns have been priced into the market. There is kind of that growing concern of how quickly the interest rates might start to rise. Certainly the quantitative easing is going to stop sooner, so they're going to stop buying back the bonds. But before they raise rates, we probably still have a little bit of breathing room there, probably into 2022. Economists out there expecting the Feds to begin wind down that buying back program. And that's pretty much priced into the market, and we'll see that when we look at the 10-year bond rates as well. Just other things going on. U.S. Congress November's agenda is pretty packed. Biden's trying to get through, of course, his Build Better Back program on infrastructure, but he's kind of got 3 different pillars. He's putting out there about $2.75 trillion. It's quite large. It's one of the packages being compared to the 1930s New Deal or the 1960s Great Society kind of recovery bills. Just try to rebuild the economic growth, fill in those jobs, and get things moving forward after the shutdown last year. So, while we're seeing certainly an economic bounce back after the shutdown, to keep this going, to keep the economy growing, it's going to take some more stimulus in some very targeted areas. Toy makers are looking kind of beyond these port and long jams to the risk of a glut. So, this is really, really common. When we get a supply chain or a big surge in demand in a product or in our sector, we've seen it many, many times over the years, is what ends up happening is companies go out there scrambling to kind of get their product out, get it manufactured up and running, get more out to the market. And then what ends up happening is you end up with this big, massive excess supply at the end. And the demand, either peters off or just slows, stays where it is, while you've ramped up all this manufacturing and shipping and supply chain reinforced to get the products out there. We've seen it a lot of times, we've seen it in energy. We're at the early stages of this, kind of energy crunch right now. When we talk about oil prices going higher, gasoline prices going higher, we've seen, big crunches in the past around energy. And then all of a sudden, the world decides the companies around the world decides to turn the earth into a pincushion, finds a bunch more oil, increases supply to the market, and then all of a sudden you have a glut. And then, you get the downward pressures on pricing. So this is one of the things we have to keep an eye on, especially on the manufacturing front, is yes, we are still in that supply chain crunch, and that logjam is there on the ports. But when that logjam breaks, right, when the river breaks through and when we get flooded with product, we have to be really careful as to what that's going to mean for earnings going forward. Facebook out there, if you haven't been following, has changed their name to Meta Platforms Inc. So if you haven't been following it, Facebook still exists, of course, as the Facebook app. Meta just owns all their different products: Instagram, Facebook, WhatsApp. And their goal is to build the metaverse. If you're not sure what a metaverse is, don't worry about it. It's a long way off before I think we get anywhere near what they hope it to be. But it's basically a virtual world. So you wear, that headset gear, and you can interact with people in different venues. They can interact with you. You can have virtual offices. You can virtual shop, virtual hang out with friends. Go read Ready Player One or go watch the movie. It's pretty much that concept that they want to try to build and move away from just a social network. And obviously the big concern there is when you think about a metaverse, it's certainly what they're envisioning, where you would design, your own virtual office, your own virtual look, you do your own virtual shop, and basically live this virtual life when you're in there or when you logged in. There's already massive concerns around Facebook having control of too much of our information, right? And what they do with that information. Well, this would just take it onto a whole other level. So obviously, there's a lot of concerns around this vision that they have. The renaming comes at a time when they're, they have whistleblowers talking about, how badly they've controlled misinformation, or how they fueled hate online, or bullying, or insurrections, all kinds of things. Not great for them, and they're kind of going through this rebrand at the exact same time. So obviously there's going to be an ongoing story. See where they head, see where things head down the road. But keep your eye out on the metaverse. I guess that's where things are headed. We can all hide from the real world in there. Other news out there, worsening shortages, of course. The supply chain, as we talked about, is not getting any better, and even manufacturers are starting to slow down because of the cost of raw materials. So, they can't manufacture the goods for prices that they can sell it. So, this high price restraint on U.S. manufacturing is causing more slowdowns. I've said this a few times, definitely if you're going to do holiday shopping, get on it sooner than later. You might even be too late for some products at this point. it's not looking good out there as far as inventories go. Inflation, of course, continues to rear its ugly head. Wage data is coming out. You know, the Fed, you know, the transitory inflation, you know, which we talked about over a month ago. You know, it's kind of getting old now. You know, is it transitory? Are we, you know, into real inflation numbers now? We're certainly seeing wage increases, you know, running rampant. The Federal Reserve is very concerned about this because, you know, once wage inflation starts to happen, you know, their tools to offset inflation start to shrink. Like pretty much all they have is interest rates after that, and they've been really trying hard not to use that arrow yet. So so we got to keep a close eye on that, on the wage data, and we're in this strange period of unemployment. So unemployment's still, you know, higher than they want it to be, but we also have this companies' inability to be able to hire people. So how come we have so many unemployed and yet so many jobs? And it kind of comes down to that wage number, right? Like how much are people willing to you know, go work for, or how low will they go do the work for as far as the wages go? And it's driving up prices, right? We've heard stories of dishwashers at restaurants being offered $50,000 a year salary just because they need somebody to stay open, and they have to pay that. So this is going to be a really tight balancing act for the next year as we deal with both all three: the supply chain, the unemployment numbers, and of course the need for workers. So it's going to be a theme that we're definitely going to hear a lot of out of that Fed Reserve meeting over the next couple of days. You know, a blow to Biden. You know, as I mentioned, he's been trying to get this spending, this $1.75 billion spending bill just on the infrastructure side of things, kind of his package that started, I think, at $3.5 trillion, now down to $1.75 trillion. And, you know, a couple of holdouts in his party, Joe Manchin, you know, committed to it or kind of agreed to it behind closed doors, but they kind of came out publicly and said, you know, he's not committed to backing it. He hasn't said he's going to block it. He just hasn't committed to backing it yet. And it's just this back and forth. So you got to feel, you know, there's a lot of good in the package. They've scaled the package back dramatically. You know, there's still a lot of good in there. And a lot of it's focused around creating jobs and giving social support to things that we, you know, here in Canada we take for granted. You know, whether it be kindergarten or you know, childcare subsidies, or even maternal or paternal leave, paternal leave, which we have here in Canada, which is a big pushing point for the package. So the saga continues to go on. Hopefully we see an end to it, because honestly, I'm kind of tired of that story. Hopefully that one comes off our list in the weeks to come. So the Congress is definitely pushing further the global tax policy that they started with the G7 and then the D20. It's grown to about 140 countries that want to take part in this global tax. And this is where corporations would pay a global tax, not being able to shelter, you know, in different jurisdictions around the world, you know, hide dollars from their home country or the country that the revenue is generated in. Even in the recent G20 meetings, it was brought up, and there's a lot of support internationally on this. And even the tech companies themselves, who have been big abusers of this, are supportive of it, because there's also been a lot of lawsuits against them in different jurisdictions. There were some landmark ones in Ireland. I think that was against Facebook or Google, one of the big tech giants, you know, where they're getting hit with really hard taxes. Whereas this would at least create an even playing field. They would know kind of where they stand. And the US would still remain one of the best places for them to operate and have the revenue reported. So all in all, there's a lot of support for this, and likely to go through pretty easily. You know, the IRS over the last decade really have just been pumping more and more dollars, not so much into help for people to file taxes, but into their collection side of things. And they currently have on their radar $400 billion in unpaid taxes that they're going to put a lot of pressure on to go collect certainly over the next decade, but over the next while. And we constantly talk to people. If you are a U.S. person living in Canada, this concerns you because it's not so much the tax you owe in the United States or you might owe in the United States. It's the penalties that will really get you. IRS is famous for having large penalties and punitive numbers if you violate one of the rules. So if you're a U.S. person, if you're, to be a U.S. person, well, if you're a U.S. citizen, you're living in Canada, if you're Canadian and you don't have anything to do with the U.S., you're a U.S. person, you have to file U.S. taxes tax return every year. Doesn't mean you owe, you have to file that tax return. If you haven't been, really suggest you self-report. They're pretty lenient on that, especially if you don't owe any taxes. You want to be careful about that. If you're also you own any revenue property in the United States. So if you have a property down there and you rent it, so you have US-based income. If any of your income from your job is paid to you from the United States, you're a US person. And if you spend a certain number of days, there's an equation that's over 3 years. So, it's not the 6 months a year number. It's actually a moving scale based on your average over 3 years. But if you spend a lot of time in the United States, you could also be captured into that US person designation, which means you have to file US taxes. Even, as I said, even if you don't owe. And there's a lot of other repercussions as well on owning any U.S. assets. So even if you own, you buy your Canadian investment account, you buy U.S. stocks, if you go over a certain number of value during the year, and it's your high watermark. So even if your portfolio went up, you went over that watermark and then it comes back down, it's the high watermark. So you have to be careful if you are considered a U.S. person about your U.S. exposure in your investments as well. So basically, if you think you fall into that category, reach out to us. We'll help you figure it out if you are. If you know you're in that category, be careful. Make sure you're filing proper tax returns, making sure you use an accountant who is familiar and experienced with filing U.S. tax returns and knows all the ins and outs, because there are a lot of extra reporting to do. Like I said, even on your portfolios, don't have tax-free savings accounts, don't have RESPs in your name. All these things can affect IRS penalties. So be careful on that front. So let's take a look at what's new coming up this week. As I mentioned, there's the Federal Open Market Committee starting a 2-day meeting. They're going to be talking about basically phasing out that $120 billion a month that they've been used to purchase assets. Have it completely phased out by the middle of 2022, and this is their first step to quantitative, closing that quantitative easing and moving towards raising rates. Pfizer is going to be reporting their third quarter, and all eyes are really taking a look at what their forecast for the vaccine numbers are, and obviously they're on the top shelf of the vaccine list these days with the only approved booster shot. There's more coming behind that, but obviously when you talk internationally, Pfizer tends to be the most recognized vaccine globally when you're looking at different countries as who's approved what. And if you want to go do travel, obviously having a vaccine approved for the country that you're going to is important, and that's it's got Pfizer out on top as kind of everybody wants to chase after that brand because it keeps them, allows them into more countries than some of the other ones right now. And also, obviously, as supplies move into that age 5 to 11 group in the United States, and then Canada's right behind them as well. Other top U.S. news: Coca-Cola is looking to acquire Gatorade's rival Body Armor now for $5.6 billion. Now they already had a sizable holding in Body Armor. They're just sealing the deal and buying out 100% of it to go head to head against Pepsi's Gatorade brand. This market's been kind of going on back and forth for a while. Coca-Cola is just going to take full control of the brand and probably roll out some new aggressive marketing tactics on that front. Goldman Sachs is also playing with ways that investors can bet on SPACs. So they're bringing out some innovative offerings to try to get people or to try to take advantage of the hype and certainly popularity we're seeing around the special acquisition companies that we've seen over the last really 2 years. You know, they've been around for longer than that, but definitely the ramping up of the pricing and the popularity of their use has been over the last couple of years. You know, I still find them controversial, and we're actually seeing a few lawsuits out on them that could seriously affect their future or affect how they're used in the future. But they're becoming more and more familiar these days, so you should be aware of them. We did do a video. If you go check out our library, you can see kind of what SPACs are and how they're created and why they become more popular in the recent years. As I mentioned, the vaccine in the U.S., the White House approved it for 5 to 11, and they're just shipping the inventories around in order to have an aggressive rollout of it over the next week. Tesla is opening all their charging stations to all EV cars or electric vehicles for the first time. It's a pilot program starting in the Netherlands first. So you're not aware, Tesla's, you know, obviously part of their growth of being one of the largest car manufacturers in the world, certainly by market cap anyway, is they've built out a lot of infrastructure. So they have the Tesla charging stations. The Tesla stations are the fast chargers. So, you know, they can fully charge a car. I think it's like 45 minutes, depending on which vehicle you're plugging in there. And they had a special plug, which was exclusive only for Tesla vehicles as they built them out. And that's a big part of switching to, you know, an EV or an electric vehicle structure is to have that infrastructure in place so people can charge, you know, whether it's having a charging station at home, having them available in parking lots at your office, your place of work, or you know, on the road, on the highways where you can pull off and you know, quickly charge up when you need to, especially on longer journeys. Here in British Columbia, I mean, obviously there's Tesla stations all around the Lower Mainland. Squamish, you know, if you're heading up to Whistler, there's some in Whistler. You know, Hope has some. They're more and more popping up everywhere, you know, along those longer road trip highways, destinations. And now, so they're piloting to open that up to non-Tesla vehicles. You know, what is that going to mean? You know, from a cost perspective, will they charge them more? You know, what is it going to mean for wait times? Because obviously, if more vehicles can use it, you know, will that cause more wait? Will more wait times at the charging stations? Will Tesla owners have any backlash against that? It's kind of, that's why they're doing the pilot over in the Netherlands, where there's a lot of electric vehicles, to kind of see how this will work out. But it's an important part of building, you know, having an open infrastructure across the highways is only going to accelerate the adoption of electric vehicles as people can, you know, recharge them more and more conveniently. American Airlines, if you haven't been following the story, in the United States specifically, but obviously here in Canada to a smaller extent, the airlines have had a lot of challenges with weather, first of all, causing a lot of cancellations of flights, but also staffing, right? So, you know, where we're seeing staffing problems in, you know, hospitality, restaurants, you know, pretty much everywhere across the North America or even around the world, the airlines are not protected from that. So while they have staffing shortages, you know, as more and more people want to get out there and do more flying, it's causing them to have to cancel more flights. They just can't get the staff to man all the flights or to pilot or service all the flights. And on top of that, of course, you know, pilots and airline attendants have a limited number of hours that they can work a month, just based on the safety rules. So, you know, even if they have people available, they might have maxed out their hours for that month and not able to service that flight, and they have to cancel. So more and more flights being canceled. So as you get out there and travel a bit more, last week, that was our question out to everybody. You know, are you planning to travel, especially with the holiday season coming up? You know, certainly it sounds like a lot more people, from the feedback we got, a lot more people have been wanting to get away or at least see family for the holiday season, which last year a lot of people weren't able to do that. Be cautious, be conscious that there's this problem still exists, and even if you have a flight available or booked, there might be more travel problems or cancellations as well. On the dollar front, the US dollar is expected to stay pretty much in this tight range it's in right now as we wait for this Fed policy announcement. So most of the expectations of that meeting is already priced in. We are expecting that slowdown on the buybacks. We're not expecting anything as far as a interest rate hike for the next little while, but it should hold in that tight traded range. And on that front, the yield, the benchmark yield fell a bit. So the 10-year had been rising. It was, almost up to the 1.7. It was 1.6 something. Fell down to 155 to, 157 range on Monday. So that's just showing that the market's comfortable with this Fed meeting, that yes, we do expect easing to come in, but it's pretty much priced in. Nothing is really kind of out there to shock the market. Also, talking about the two-year, the 2-year U.S. Treasury in the past months has been climbing a bit, just on the worries of those interest rates might be sooner than later in 2022. On the oil front, although we saw last week the oil price weakening off a little bit, starting to rally back up again. It's headed towards the $85 price range again. And this is on OPEC, that they're OPEC Plus rather is sticking with their output policy. They are raising production by about 400 barrels a day, but that's just keeping pace with demand. So there's still a strong pricing pressures on oil. As I mentioned, that's likely going to continue for a while. Don't think we're going to see a break at the pump out there. So maybe you should go out and check out the electric vehicles and see if there's one out there for you. Because it doesn't look like we're going to get a break on gas prices anytime soon. Gold's been holding flat around 1,800. Now it's just shy of that. Again, just watching what the Fed's going to do with their tapering announcement, and basically saying that they don't expect that rate increase to happen anytime soon. Base metals showed a little bit of weakness, not much slowing demand in the China's property sector, because of course they had Evergrande over there going into financial trouble, one of the biggest real estate builders. So while they work that out, we've seen a bit of slowdown on the demand, but global growth stays pretty strong. So I don't think that's going to have any major impact when it comes to base metal pricing over the next week or month. So with that, everyone, if you have any questions or you want to give us any feedback, any ideas that you want us to cover for topic I'm going to be doing this week, we're going to send out another video. It's going to be on preparing for the tax season, because we are coming into tax season now. Getting things ready before the end of the year, because after December 31st, other than RSP contributions, there's not much we can do to plan for taxes. So things like tax lock selling, we're going to go into some different strategies you might want to consider, or at least things to take a look at. So I'll get that video out to you in the next day or so. But go to mikeonmoney.com. Let us know your questions, your comments, anything, and check out our other content. With that, thanks very much, everyone. Enjoy the rest of your week, and we'll talk to you again soon. Thanks now.